All right, you guys. So it's Sunday. What is it? Today is Sunday, August 14th, right? August 14th. So pretty much, I mean, we're at that point. We have 4 more months left in the year. We're at that last quarter of the year, and I mean, it's either time that you truly, that you're fully locked in and ready to, hit your goals, and and advance and progress these next 4 months, or you kind of you're just gonna see how how you end the year off, right? Like, you're gonna look back at it in 4 months and the year's gonna be over and we'll be going into 2023 and you'll look back at the goals that you set for yourself at the beginning of the year and then you'll see where you're at the end of the year. So, we still have a lot of time left to, to get as close, to hitting those goals and accomplishing those goals and whatnot. So, like I said, I mean, it's just that time to truly lock in. I always tell you guys, I mean, a lot of you guys know my birthday's in October in a couple months. So I take these next couple months, as serious as possible with just, going as hard as possible. And I've been talking that to a lot of people, it's like we really want to progress and we want to go as hard as possible, but we have to realize we have to slow things down and take everything day by day because it's like we can't rush, it's like it's with trading. It's the mindset of trading. Everything correlates with one or another because you can't rush the days. You can't rush the sessions. Like you can't get rich in one session. You can't hit your goals in one session. Like it's going to take 10, 20, 30 trading sessions for you to get to where your true goal is, right? We have day-to-day goals. That's why we have trading plans and why we follow trading plans so that that after 2 weeks, after 3 weeks, after 4 weeks, you can really, um, gauge your progress and see where you're at, right? By following something. If you're not following anything, then you don't know if you're making progress or if you're staying stagnant or what needs to change. If you don't have any type of goal, if you're not tracking your trades, if you're making withdrawals and you're not tracking that, you're not doing you're not doing your due diligence and it's not gonna lead to any progress and you're just kind of be stagnant in the same spot, right? So, so much of trading is the mental. We can look at the charts every day, but if you're not waking up for London session, if you're not waking up for New York session, and you're not doing, your day-to-day markups, and you're not staying consistent with the pairs, doing your your homework on the weekends. Everybody always, on the weekends, people take all that time off and they stop looking at the charts. They forget about trading. Then they try to come right when the, Monday for London session or even Asian session and just start trading right away and think that they're going to make money. And that's not the case. You're going to lose money. And it'd be those days that sometimes you get lucky and make some money, but that's all that is, it's luck. And it's not long-term money and it's nothing that you're going to be able to be sustainable with. You'll just end up blowing your account by doing that consistently. So, like I said, I mean, we can go on and on and on about the charts, and we do charts every day. We have calls every single day. But if you're not truly making the adjustments in your life to be up for London session, to be up for New York, and you're not cutting out the distractions on a day-to-day basis, and honestly, none of this matters. Like, and you're not to say wasting your time being on the calls because you're learning and everything, but you are, I mean, there's probably better things that you can go do if you don't ever plan on, following what we talk about on a day-to-day, week-to-week basis. And you're not going to get it the first week. You're not going to get it the second week. That's not how things work, right? Like it's not true. You go to work, you have orientation for a month, 2 months before you truly learn the job. You go to college for 4 whole years before you even graduate and get anything, to show your efforts the last 4 years. So you can't rush trading with a week, 2 weeks, 3 weeks and think you're going to understand all this stuff right away. But that's why we have these calls every week and they're repetitive for that exact reason. So, as you continue to do these things over and over, you start to see the patterns, you start to see how the market works, you start to, you really start to understand things. And that's where you get the trust to getting your trades and just, and trust your setup and trust your move. So that's that. That's my little spiel for the beginning of the call and whatnot before we get started. So first things first, as always, right? Looking at news. First, forexfactory.com. You can use Forex Factory, my FX book. But I pretty much just turn mine on. I only see red folder news and holidays. So we have a Euro holiday on Monday, which is tomorrow, later tonight. AUD news on Monday, Monday night Asian session. CAD news on Tuesday. More AUD news, NZD news, GBP news on Wednesday. USD news on Wednesday and AUD. So it's going to be a pretty, AUDs, it's a lot of AUD news this week. So you might want to look at like GA or AUD USD. We'll check out because there is a lot of AUD news. So you're gonna find some good setups with that. And that doesn't mean you have to trade at the exact time of news. More than anything, you stick to your time and price, and you stick to everything that you know of when you should be trading and when you shouldn't be trading, because that's when you're going to find the true entries and the true moves that you'll be able to potentially hold or just fully trust, right? You don't want to just be trying to trade with news because you know the market is going to be moving up and down. You let that happen, you let them make its moves, and you still trade at the right times. So, um, so that's looking at what's it called? That's looking at our news to start the week, right? So let's get into our charts. And the call was recorded. I did a lot of talking at the beginning, so if you just hopped on, you really didn't miss anything other than me just talking about, the discipline of trading and just, needing to make the proper adjustments, in life in a sense to really see, the true benefits of trading. When things aren't right in your life, then it's hard to see progress with trading. That's why you're not wrong. It's never wrong to take a week off or take 2 weeks off or take a few days off from trading, because it's always good to get that mental reset. If you're trading every single London, every single New York session, that's not healthy, right? Like when you're in the process of studying and trying to understand this, you do want to be up, you do want to be up for your sessions, but you don't have to take a trade every single session, and not every single session is going to be a profitable session. Sometimes you'll hit break even, sometimes you'll take a loss, but that's why we use risk management, and we know when we should be trading and when we shouldn't be trading. Because at the end of the day, all you have to really do is be up for an hour at night for London session. You don't have to be up for 3, 4, 5 hours. If you're staring at your charts from 12 Eastern to 3 o'clock, you're gonna fall asleep before London session even opens. And then it's like, you really didn't learn anything because you weren't even looking at the charts at the right time. So you can't fully understand how the market's moving and how the market's working because you're falling asleep before the moves actually really happen, right? So, um, so like I said, that's my spiel with that, right? Like it's so mental. Everything with trading is mental. I know so many great traders, and I know so many, people that love trading, but then after a couple weeks, after a month, after 2 months, they disappear. And when I talk to them, like, what's going on? How you doing? You still trading? Nah, I stopped, kept blowing accounts, kept, and the second somebody tells me they keep blowing accounts and that's the reason that they're not trading, it's because you're not following the rules. You don't even have a set of rules. You're really just trading to trade. And then, then I ask the follow-up question, are you getting on the calls? Are you asking questions? And it's always like, nah, not really. Like, I don't have time for it. And when people tell me they don't have time, that's like, I really just disengage after that, honestly. Like, I don't even really, I can only have so much of a conversation with you and talk to you so much, because if you say you don't have time, one, I have like younger people, older people, and everything, but I either talk to you a lot or I follow people on social media, and you have time. You have time. You're just not making the time for it because you don't really care for it as much as you think you care for it, or you think it's going to be an easy path, and it's not easy at all. Like it's not easy. But once you slow it down, it becomes easier. It's never going to be easy. And if you think it's easy, then that's the second that you start blowing accounts, and then you disappear. And I don't like that. I don't like when people disappear, and the reason is for blowing the account. Like it's not to say giving up or anything, but that's things that you can fix. And it's just a matter of, why are you trying to get rich in one night? Why are you trying to get rich in one day? Just slow it down, trade with smaller lot sizes, enjoy and understand the moves, understand the trades that you're getting in, practice holding a trade. Stop trying to scalp the market that's the thing with scalping the market is you can make money, but we always talk about how not all money you make in the market is good money. Yeah, you can pass an account, you can pass a challenge, you can pass phase one, might be able to pass phase two by just scalping the market and getting back by it super fast. But guess what happens with that? Then ask yourself, am I gonna make it to the first withdrawal? Your first withdrawal is 30 days after you pass both challenges. Like you can pass a challenge by getting by it really fast and trying to rush it, but then when you do that, once you get funded, then you blow your account, and then guess what? You never get the money. So you just traded for a whole, you got to wait 10 to 30 days, 10 to 20 days, 20 plus days to even get funded and pass the challenges. And then you blow the account, and then you never even see any type of withdrawal, but you've made all these trades and you've been finding profit, and now you blow your account. Then you're definitely not going to come back to trading. You're definitely be gone. Then you're going to be done with it, because it's like, I have made no money from this. I have made absolutely no money. I catch trades, I catch moves, but I keep blowing my account. And it's just a mental thing and not having any type of plan. You don't increase your lot sizes. Increasing your lot sizes, you blew your account already eventually. Whether it's the first day, the second day, The third day, eventually you blew your account. The second you change your lot size from what you used at the start of the week, you change it on Wednesday, Thursday, Tuesday night, you change your lot size. By Friday, your account will be blown because everything that you made the first 2 days, the profit that you caught, people's issue isn't catching the amount of pips. It's that they catch pips. You can end the week in positive pips, but in the week with a blown account still. And that's like it's so backwards. Nobody I know has issues with catching pips. That's not anybody's issue with catching pips. The issue is I keep blowing accounts. It's because you're over leveraging or you're not using a stop loss. It's one or the other. Either you trade with no stop loss, which is crazy, or you're over leveraging on every setup and you're not, and you're completely over leveraged. Even an over leverage shouldn't blow your account. You might lose way more than you should, but your account shouldn't be blown to where you're just completely out the game. So like I said, this comes from, and I have the link after this call for everybody to schedule their one-on-one and get set up with the system. My first priority is everybody that needs to get set up with their system and get their templates is, I want you guys to make sure that that's set up and, more than anything so that you can properly practice. And one thing going into this week that I want people to do is, practice holding a trade, leave a runner on there. I talk about it in the chat so much and on the calls. When you catch an entry and you catch a move, leave a partial. Stop taking full profit on every single trade. After you get up 20, 30 pips, take some type of money and pay yourself. Because even if it comes back and hits you out at break even, you made some money. And now you'll be more confident with getting in that next trade. Even if it's $5, even if it's $20, even if it's 30, even if it's 100, whatever your funded account, everybody is different. Everything is different. But I promise you, every single dollar matters when you're taking partials, especially when you're using the same lot size all week. Because then as it goes and you get stopped out of a trade, but you took partials and you made some money. Even if you, like I said, if you're using a 0.25 lot size, take 0.10 out. You go up 20, 30 pips, take $20, $30 out with the 0.10. Let the rest of it run out. Let the rest run for the next and try to catch the 40, 50 pip move, the 60, 70, 80, but pay yourself first before anything. Because now when the trade does come back and it does pull back, you're not overly stressed about not making any money. You already took some money. If it does stop you out, now you're more confident with getting back in the trade. And if it does run, good. You caught the right trade. You're in the right move. You don't have to stare at your chart because you made money and you let the trade run to your projected take profit area. And that's that. And yes, you're not going to make, if you want to catch 50 pips with a 0.10 because you want to make $50, it's not going to take the first trade, right? Because you take profit at 20, 30 pips. So then once you get up 50 pips, you might not be up $50 anymore. You might only make $35, $40 on a trade, but that's not the point. That's not the point. The point is to always pay yourself because you don't try to hit the home run right away. Load the bases, get on base, start things off slow because as the week goes and you're going to trade, the market's going to be here. It's not going anywhere. You're going to allow yourself that confidence and that ability to actually, trust your setups, get in your trade, and then you find that trade where you're like, yep, I'm in this one and I'm going to go, I'm going to hold this full trade all the way through and I don't have to take partials on this one because I'm super confident. I've already taken partials on my first 3, 4 trades of the week. So my 5th, 6th trade of the week, I'm going to let it run because I'm already good. So now if I catch the 100 pips on Wednesday with a 0.25 and I might have only made $30, $40 on the first 2 trades, but then you're in profit and you hold your trade for 100 pips, how much did you just make with the 0.25? How much do you make with a point? Who's keeping up with me? How much do you make with a 0.25 and 100 pips?
250.
250. So let's say, like I said, with the 0.25, you took partials the first few trades and you might have only made $30, $40 on those setups, $50 on those setups. But now you're in profit on Wednesday, Thursday, Friday, and you saying that you see a setup that you might be able to hold for 100 pips. Are you going to take partials on that? I'm going to let it run. I'm going to get my 100 pips. That's why you guys see me say in the chat, come at the end of the week, like, hey, I'm either holding this for the 100 pips or I'm letting it hit me out at break even. Because we done took partials throughout the week. We hidden goals, we hidden plans. We're seeing profit at the end of the day. So now I can be a little more risky on this setup. Either I'm gonna get it or I'm gonna wait for it to come back to me. And like I always say, if you get stopped out of a trade and you're using risk management and you're managing your trades properly, all that's gonna do is allow you to get in that trade at a better entry, a better price, and then you're gonna make back, you'll make back that money plus more. So that's why we don't just let trades run 30, 40, 50, 60 pips in negative. That's crazy. It's crazy to let your trade do that because at that point, you should have been in the opposite trade. At that point, your trade is wrong. Your trade is invalid. It's not right. You're in the wrong move. And you have to be okay with that. And then when you are wrong, you have to take that session off. You don't try to get it back right away. If it's after 4 o'clock Eastern and your trade was wrong and you got stopped out, let it be. Come back to New York and find a setup for New York. It's always going to be some type of setup between, your 2 to 3 pairs. And that's the other thing. Don't be trading so many. Whatever you start the week off today, do not go and change up on Tuesday, Wednesday, Thursday, Friday. Figure out what it is today that you like. We'll go, like I said, we're about to go on our charts right now. So I already see some things that I like this week a lot. We'll see what we like. And then from there, stick with those pairs, because then when your setup does present itself and you've already looked at it 100 times, you're going to trust your trade and you're going to trust yourself more. It's just like I said, it's not as simple as that, but you have to slow things down, right? You have to slow it down, and the market moves fast, but you have to be slow. So looking at so let's get into our charts, right? Okay. So first things first, what you should always do on the beginning of the week is not look at your pairs. Don't go looking at GU, EU, EJ, GJ, UJ, whatever JU, whatever it is that you want to look at. Start off with your correlations. Start off with your DXY or JPY. Pretty much everybody, at this point, if you're new on the calls, you're new to me, you're new, whatever, or you've been around for a long time, you guys know we're not trading. We don't trade 100 pairs. We look at the same pairs, almost the same set of pairs, and the same, whether it be a USD or a JPY, and it's for certain reasons. They show us our best setups, and then we also have correlations with those, to where if you use these correlations, it's just going to give you that much more confidence in holding your trade, trusting your setup, right? So first things first, we'll look at the DXY. Um, we're looking at the DXY, right? So when we're looking at the DXY is the opposite of or USD. So let's just do a quick little overview of our DXY, right? The DXY is the dollar index. It's not on, or it's on MT4, but it's on TradingView as the DXY. So if you type in DXY on TradingView, you want to bring this up and you want to keep track of this throughout the week, right? Now with the DXY and the dollar, it's called the dollar index. What this means is for USD XXX pairs like UCAD, UJ, I don't even know what other J's there is, but or USD pairs, right? USHEF, the DXY is going to be positively correlated. So so let's go first. When the DXY is bullish, then we're going to be looking at USD XXX pairs to be bullish as well. So when the DXY is bearish, we're going to be looking for XXX USD to be bullish. Does that make sense? I should have probably did it the other way too. So when the DXY is bullish, then we're looking at USD, what is it? Like XXX USD to be what? What would this one be? If the DXY is bullish and our pairs like UCAD, UJ are bullish, then when the DXY is bullish and we have XXX USD like EU, GU, what would we be looking for? Bearish, right? Simple. It's simple. So these concepts are they're simple, but that's why you just have to slow things down when you're trading and fully do your analysis and just trust your trade so that you can see the progress. And this is why I talk about forex pairs so much, and it's really like I really just talk about indices when I do one-on-ones with people, because it's there's a whole concept with everything with indices too, but you use it's the same thing. But like I said, I love the forex pairs because we just have that much more confidence to get in these trades, to catch these 40, 50, 100 pips, use minimum risk, and then you go from there. So when the DXY is bearish and we have our XXX USD as bullish, then what are we looking for with USD XXX? We're looking for these to also be bearish. So it's easy to go throughout your week and forget this. That's the biggest thing, is it's so easy to go throughout the week and just completely ignore this and ignore the chart. But then guess what? Then when you lose a couple trades and then you get on a Zoom call in the middle of the week or something, and then we look at the DXY or we look at the JP, we'll look at JPY next. You look at these and you'd be like, damn, if I was looking at that, I would have done this. Well, why weren't you looking at it? Why were you doing your own thing? Why weren't you looking at it? Why? Why are you doing your own thing, right? Like, this isn't anything. I didn't create this, right? I tell you guys, I didn't create this. I didn't come up with this. It's not Mike B's strategy. I don't give it my own name. I don't try to do any of that type of stuff, right? Like, because these are just things that once you learn and you see it, and you understand it, then it's like, okay, this is how the market works. This isn't a certain strategy. This isn't a Elliott wave or whatever, or whatever people want to call things, all these different things. It's none of that. This is simply how the market works. This is how a chart works. Once you can read a chart, you unlock true financial freedom, because you can trade in any market. You can trade in the cryptos, you can trade in the stocks, you can trade in the options, you can trade in anything. You can trade any you once you can read a chart, you can trade in anything. So the beauty of Forex is, like you said, we can buy and sell, and the charts are open 24/7. So you're seeing consistent candlestick movement. The difference with like options and stocks is that they're closed 24/7, but those markets are actually still moving. That's the Forex market. So those charts often have very large gaps, and they make they have very large gaps, and we know what happens with gaps is just a lot of wins and losses. Like, it's really big wins and super big losses too with that. So the beauty, like, I've always gravitated for Forex and love Forex, is because you're able to control your risk more, and also at the same time you're able to in a sense control your outcome. So it's not the big gaps, it's none of that. We can control our trades all day. We can manage our trades. It's not closed at a certain point of the day. So there's no rush. If you're trading stocks and options, they have to be out the market by 4 o'clock Eastern, or they're going to get stuck in their trade. So they're rushed to close trades. They're rushed to trade. They're rushed to be in the right move, because it's such a small time frame. With us in this, we don't have to be rushed. So you have to truly, slow it down, and just slow it down, slow everything down, fully understand the concepts, because once you fully understand the concepts, then getting in with big lot sizes is nothing to you. The people that trade with small lot sizes for a long time are the ones that stay around, because they're not in a rush to get to the money, and they just want to understand how the market works, how the market moves, to trust these setups, and trust your trades and trust yourself. And then after that, the money's going to come. Once you know how many times you can catch 25, 30 pips consistently, 40 pips consistently, then once you start popping a 1.0, that's 200 to 300 to 400, $200 to $400 a trade, once you get up to trading with a 1.0 lot size. But it comes from the 0.05s and the 0.10s for trading with those for 2 months, 3 months, to get you in that confidence of being able to do that, and not just doing it at the right times, and following, how the market is working. Because then that's when your 40, 50, 100 pip moves come from. So like I said, you just got to really just slow it down, right? So with the DXY index, with the DXY, and I talk more on Sundays, than the charts and anything, because throughout the week, I mean, by then you should already be in that mindset. Your motivation should be, I mean, whatever situation you're in, right? Like, that's your motivation. That's my motivation on a day-to-day basis. I don't need to, be lectured to, and, watch all those type of motivational videos or anything like that. It's just, we know what's out there, and we know what we need to go get. So DXY index, please keep track of this. I have all these pairs up on my chart. Yours shouldn't look like this. You should have 3 to 4 things up here. I think my thing looks a little better over here. You should have, it doesn't, but you should have about 3 to 4, just like that. Yours should look just how I just shrink mine down. That's how yours should look. You shouldn't have more than 5 pairs sitting up on your thing. The lower, the less pairs you have up here, the more money you'll make. Simple as that. The less pairs you have, the more money you'll make. The more pairs you have, the more money you'll lose. Because what do you want to do when you're trading? I don't see a setup, I lost. I don't see a setup. I got in a trade, I lost. You just start going through every single thing. The next thing you know, you end up on US 30, and now you're gambling for your whole account. Now you're in fight or flight mode, and it's only been one session, right? And you're like, it's a Monday night, and you already gone crazy. Looked at every single pair in the market. So, shorten everything down, slow everything down. Less is more with trading. Everything we're doing, less is more. Less is more, less is more, less is more, okay? So DXY index, right? Keep track of this all week with your USD pairs. So when we're looking at the DXY on the weekends, it's the most important time to start on your higher time frames and do your top-down analysis. So starting on the day, I mean, you can go all the way to, the weekly if you really want to, but I don't go that high up. It's not really too much to look at that, and you're not going to find your day-to-day setups. Now, for direction, you can have a good idea of where you're going and where the market is targeting, but more than anything, starting from the daily time frame, right? So I use TradingView when I'm doing my markups on the weekends and everything, because MT4 is old school, and it's, can't really, get as busy and as, can't do everything as I would like as quick with, as on TradingView and everything. So when we're looking at the DXY on a daily time frame, you want to have your TradingView set up. You want to have your TradingView set up to where everything is easy and accessible. Like you have your time frame starred. I have the 1 hour. I have the 2 hour starred for whatever reason, but the 1 hour, 4 hour, 15, 5 minute, that's all you need starred. You shouldn't be going down to the 1 minute, the 2 minute time frame too much, it really, I mean, more than ever in a sense. But you want to start what our main time frames, 5, 15, 1 hour, 4 hour daily, because that's where you're doing your analysis. That's where you're doing your analysis from. So you don't need anything else. You don't need anything else. And then you star your favorite, then you make a star for your favorite, the main tools that we use. And I have our line because we want to draw where liquidity is at. We want to draw that line of liquidity for that. So that's easy to draw there. Then we have the point, you can use the pointer too, to point for areas of interest of where you want to see the market come to. You'll see me use that one. The ray, oops, don't know what I just did there. You just want to have your favorite ones. The fib, easy, accessible, so you can draw it up quick. Your zones, easy. You want to draw on your chart, do what you want to do there. Everything is just easy, easy. Like I said, trading is so mental that everything has to be, comfortable for you. You have to be comfortable. Things have to be easy, accessible. You have to be in the right space. You have to be in the right space mentally. You want to have your little trading area or whatever your routines are when you're trading. Like every single thing matters because you're getting a routine and then things will just start to, things will start to flow. Having your long and short position easy to be accessible. So when you're looking for a trade, you can mark your setup quick. And that's that. Those are my, that's how mine's is set up right there. So it makes it easy for me on a day-to-day basis just to, mark up the chart, see what I'm looking for, draw a setup and take things from there, map out a trade. So when we're looking at the DXY on a daily, right? If we look at this, the market moves in intervals, and we always talk about how the market is an algorithm and it moves in intervals. It moves in intervals. So when we're looking at this, like when we're looking at the DXY over here, right, we can see how it's been super bullish. It's been pushed up, dropped down once, pushed up, dropped down again, pushed up for that third time on that run to the upside, right, coming from a lot of bullish momentum. So we've seen 3 clear pushes and drops to the up and down side now. So now when I'm looking at the DXY, and we can see how it's been dropping to the downside since July 14th to be pretty much exact, right? So what was that? July 14th. What month is July? January, February, March, April, May, June, July. So for about the last month and a half, right? Or about the last month, that the DXY has been bearish. So when we're looking at this, we know it's a lot of bearish momentum in the market right now with the DXY. So what do we have? In a sense, what are we targeting with the DXY? If we're looking at sellers in the market, what would we be looking at? What would the DXY be targeting? It'd be targeting lows in the market, right? So we go on the higher time frame, and that's when you start to mark up, where are my swing highs and swing lows? And a swing high and swing low is just like a higher high, higher low, the clear higher high, higher lows, lower low, lower highs that you see in the market. So like these swings right here, these are areas of what we're looking at as, that's where liquidity is found in the market on a buy or sell basis. So when the market is bullish, it aims for highs. And just like this, we can see how it's bullish. Price aims for that high, takes that out, goes and continues pushing after it makes that lower low. So then as the market goes bearish and it starts to get that bearish structure, and we see structure being broken and then trading lower and start trading lower, now we say, okay, sellers are in control of this market now. So where are we targeting now? Now we're targeting swing lows in the market from swing highs, right? So what do we have right here? Now we would target, this would be a swing low because it's the last time the market, and let me actually draw them on the chart today. This would be a swing low right here. And if you want to draw a straight line, if you're using like the trend line, right, and you want to draw it straight, you draw your line and you hold your shift button on your chart. So if you hold the shift button, you can see how like my shift, I'm not holding the shift right now. When I hold the shift button, then it goes straight. So I can just drag it across and it's a straight line. Because before I didn't know that, and I would try to like draw it straight and it'd be looking like this or something. And I would think that's a straight line. But you want to be accurate, right? So you hold the shift button down and that drags that straight line across. So that's our liquidity right there, right? So that's that liquidity right there. So now when we're looking at the DXY and we're looking at this right here, so we have reaching for these lows. Where's our last? This is a major low in the market. You have your major lows and your minor lows, right? So if that's a major low, where's a minor low at inside of that trend that's being formed right here, which was basically like last week's low right here, because the market came, hit this area twice and traded away from it, right? Traded away from that, and now it's been pushed into the upside. It ended the day bullish. The day ended bullish on Friday with the DXY. So when we're looking at that now, what do we see though? This is like the same setup that we go over throughout the week so many times of we see the market. This was a low right here where it traded away from it for 1, 2, 3 days. And then when the market came back and took out that low, what happened? Now it clears out a low. The market pulls back inside of like an imbalance order block. And then what happens from there? Starts to attack back to the low. And then what are we going to be looking for? Then it would do like that same type of thing of where it pulls back, consolidates, maybe stop, and then it starts to reach even lower. And we see this on a smaller time. You see this same setup on a 5 minute, on the 1 minute, on the daily. You see the same time frame. You know, you see these same type of setups where it clears out a low, creates a major candlestick, bullish or bearish. Then it trades back inside of that, and then that's when it drops back down. Because what happens from here is after it clears out these lows, it activates sell stops. People that have sell stops to, you know, try to get in a trade and take it all the way down. They go into a little bit of profit, and then what happens? Then they take it back up because it just came from a super strong sell. It's like a gap in the market right there, right? Those imbalance. So those people that trade late and trade those type of trades and breakouts, you know, and they try to hold a trade like that to get in a part of that move on every time frame. You catch some type of profit and you'll be in profit for a little bit, but then you'll see your trade often come back before you can hit your overall target, put you in a lot of drawdown. And then, you know, if you're not holding your trade forever, by then you've already closed out your trade, and then it takes it all the way back down and then hits the target. And that's why you'll see so many of your setups, you know, that you'll be in profit for a little bit. It will come back to you and it will consolidate back at your entry, because that's the market maker is basically you know, it's trying to get you out the market. That's exactly what it wants you to do, because then it will get you out the market and then go straight towards your move, right? So entry is so important, but also having a setup and having a setup and just trusting your move is also super important. Because just think about you sell from right here. Think about the people that sold from here. Think about the people that sell. They're not panicking. They're not panicking off this pullback, but you're panicking from right here because this is your entry and it's pulling back. But you know it's bearish, so these people aren't panicking. So you have to act like, even when you have a bad entry, you have to act like you have a good entry. That's always my mindset of try to be, you know, even when I have a bad entry and I don't like my entry, I have to act like I have that same entry, because that's the mindset that you have to have. Now, obviously, if you get in you have a worse entry than what you wanted, you lower your lot size so that it's you have the same emotions. Your emotions aren't any different of your original setup. You just missed your entry, so you go lower on a lot, but you're trusting the move, and that's that. And all you have to do is work on your timing next. You don't have to work on anything else. You're in the right move. You're in the right direction. Lower your lot size so that you can be a part of the move, and you don't have to be stressed out about blowing your account or anything like that. So we're looking at this all in the daily, because this is going to be really strong setups. But these setups are going to take days to play out, so that you know that on a smaller time frame, when you go through London and you go through New York and you see a setup that correlates with your daily setup, you can hold that same trade, as opposed to you see the opposite moves. Like some of us tried to buy, we were buying EU or GU at the end of last week, and it wasn't a bad trade, but we're not looking to hold that trade because of what? We weren't looking to hold that trade because of what the DXY was doing at that time. So now, right now, what do we see happening is what we see happening right now is it's trading back inside this imbalance, right? So what I would do is I would take a fib from the top of that imbalance to the bottom. From the top, there's no wick at the top. So, I mean, it's a small wick, but we take the fib from the top of that candlestick to the bottom. And then this is when I would draw my zone, draw my box, whatever, from the 50% to here. And I would say, this is my sell zone in a sense. This is my sell zone. I'm looking for the market to reject off of here. That's orange. I don't know why I did orange. I'm going blind myself. There we go. So that would be like our sell zone, right? And that's on the daily time frame. So I'm not looking to take an entry off of that. But then when I start to go down to smaller time frames, and we drew this fib, we had a pretty much a similar setup. I tried to delete everything before we got on the call. We had a similar setup, already looking for this going into next week. So what do we have happen over here with the DXY is, okay, we're playing inside of, and you can delete your fib after that. Now that we're playing inside of this 1 hour daily, this 1 hour daily order block, right? This imbalance up there. Now, when we drop down to our 1 and 4 hour to look for day-to-day setups and day-to-day entries, now what will we be looking for on a smaller time frame? On a smaller time frame, what do you see now? Now, what do you see clearly? We have a double bottom right here that we already marked. Let me delete that. I have to delete that. What do we have right here? What is this? That's a double bottom, right? So what would you do right there? You would note that as an area that you're looking to get, that you're looking to attack, right? You're looking for this double bottom to get attacked, because what do we have right there? That's when I come and I'll draw the money symbol or something like that, whatever you want to use, because we know that money is sitting underneath here. And what we mean by money is buyers, some people, the people that bought, that's all that is. People that bought and have their stop losses sitting underneath here, which in the case, I mean, it's us, right? Some of us caught those buys with GU or the opposite with like, what was it? With UCAT or UJ, whatever. And those sells with EU and GU because of what? Because the DXY went bullish and it created this double bottom, and we're able to catch that bullish play back inside of this imbalance up here. So we knew it wanted to continue dropping, but what do we have now? Now it's trading back inside this imbalance on the 1 hour. The market is readjusting itself. Now orders are being balanced up there. Now everything is matching with itself. So after that, what are we going to look for now on the smaller time frame is what? On a day-to-day setup, what we want to see with the DXY. I would want to see a stop hunt to the highs, right? We want to see it come and trade, take out some type of highs throughout the week. And after we get a sell setup with the DXY and we look to take it to the downside, then what does that make with your EU and GU setups? So, what will we go over here and look for? What will we go over here and look for with EU and GU? What will we look for? I got all these fibs. I probably should have tried to delete them before. Look at how many fibs I got on the smaller time frames. My bad. Let me delete these real quick so that we can see it. You can pretty much see what we see on the daily time frame with EU right here. What am I looking for on the daily? If we're looking for the DXY, to come and reject off of this zone up here and continue dropping down lower, and we're looking for the DXY to be bearish, then what am I going to go over and look for with EU?
Buyers,
right? Yeah, looking for buy levels to buy off of. So I kind of already had it marked up in the sense of, from last week too, but it was just Asian high, Asian low that we never played back into. But you can see how on like the daily time frame, we have a super big sell candle right here. Super big sell candle. So what do they do right there is people, when you go down to that smaller time frame, you can see how it just started dropping off very casually, right? Started dropping off. So now what I want to see it do is come back and attack like these lows right here. We kind of have like a double bottom right here. What I want to see is we never had this Asian low get hit over here. I'm looking for some type of pullback to clear out those lows hanging out over there. If we can come and attack these lows, attack this liquidity right here, I'd be looking for some type of buy play to take it back up and attack these highs and, look to hold those buy, entries and just stack throughout the week. I'll take profit, even though I want to see buys up long-term all week. That doesn't mean that I have to, in a sense, hold a trade from the bottom to the top. You take your profit, you take your 30, instead of catching 20, 30 pips, I might go for 30, 40 pips on the buy plays every time, because it's going to pull back in your strongest setups. And some of my people that watch those videos over the weekend, your strongest setups are going to come from multi-day session setups. It's not going to come from one session. And that's where the true patience comes into play. Because if we look at the dollar index over here, right, it went bullish on Wednesday. It went bullish and it looked like it was gone, right, going all the way back to the imbalance. But like I said, your strongest trades are going to be your multi-day setups of when it takes 2 days to play out. What do we have happen is it pulls all the way back the next day, 24 hours, a full 24 hours, it pulls all the way back and retests that level. And then what do we get? Then you get the move that actually plays out, the strong move all the way back inside that imbalance there. Right. So when we're looking at things like that, that's why I always say, just take what the market gives you. Once you go into consolidation, don't be scared to take your profit and come back at it the next day, because more times enough, you're going to find that same exact setup the next day, on that next day, if your trade is correct. And it's like for a lot of setups, it's for multiple setups. If you just go back and back test it more times enough, if you took a sell over here and you sold it down, you caught some pips, but you held that trade all the way through. You were holding, trying to hold it all the way through, and you were the right trade. But imagine you take your 20, 30 pips, you get in it. Now you come back the next day, you might be able to catch that same trade, stack it again. Now you doubled up. And then when you come back at it the next day, you find the same exact setup. You haven't cleared out your lows yet, because you're targeting from here to here. You're targeting over here. You're targeting to your highs. You're targeting back to these lows. So you want to hold this trade from here to here within 1 day. What it takes 1 day, 2 days, 3 days to play out. And you could have, caught 20, 30 pips each time. And then, by then, if it hasn't, your trade hasn't clearly gone to go take it out, you're going to hold it eventually. And then you take that out. And that's how you get a part of those 100, 200 pip moves. You're not always going to be a part of 100. You're not ever, like we always say, not every single trade is going to be 100, 200 pip setup. It's not that's not the case with things. So I'm looking for the DXY to start the week off bullish, attack back towards like these highs up here, play off of like that daily zone. I think we'll push all the way up inside that daily zone, attack these highs right here. And then from there, I'd be looking for some type of stop hunt and take it back to the downside and attack these lows from there. So we got that bullish push, the one bullish push, until, like I said, until we get up to these highs right here. I'm not going to be looking to sell the DXY until we get to those highs. So anything from there to start the week off, we get any type of pullback. We got 1 push up, pull back, 2 push up, pull back, 3 push up. Then I would stop looking to buy the DXY up here and start hunting those sells to come back to the downside. And it's not going to happen like that. It will, obviously it'll pull back, drop, pull back, consolidate, drop, pull back. And it's not just, nothing is straight in the market. Everything pulls back. So once you understand that concept, and that's like my thing when people come on TradingView and they send out setups, or they send out the chart and you're practicing, you don't just draw your position marker for 200-300 pips off every, that's not realistic. You're not going to hold every trade for that long. And that's not giving you, you're not actually practicing like that. You position it out, make sure you're, 20 pips. And then what can I do to catch 40 to 50 pips? Everything should look something like this on every setup, 40 to 50 pip setups. You don't have to go for, you should be realistic, right? You should have your targets. Everything should make sense. It shouldn't just have, you shouldn't just be drawing it to draw it, anywhere on the chart and having it go from, having some super, something like that, because you're not going to hold a trade that long. You're not going to do that. It's not realistic, right? You're not, you have to be realistic with everything that you take in every setup that you get in. And then that allows you to practice, your setups and just continue, just practice your setups and practice your skill and work on your skill like that. So that's, looking at, like I said, that's what I'm looking at with the DXY, like that. So we'll come over and we'll look at GU too, kind of looking at GU as that same thing. I want to see the week start off as bearish. Let me get rid of what we had last week. Seeing the week start off as bearish, come trade somewhere up inside of this and continue dropping down to target back inside of all this liquidity right here. We can see how we have all these lows that pretty much never got hit. It's like an area of support right here. So I wouldn't really look to buy GU until you see this get taken out under here. So we have like this low right here, just hanging out right here. This is the low, not the low of the week. Oops. Shift button. Right. So that's liquidity sitting right there. So we're going to see that get taken out through this week. So if we get some type of stop hunt to these highs, look to sell GU back to the downside, target inside of that. But really you'd be targeting to these lows over here from this last super big, strong bullish push. So they'll go take out these buyers all from over here that are trying to hold those trades forever. They'll take them out, bam, retail traders, activate these sells. Because by the time, once the market gets over here, you shouldn't be trying to sell it once it gets over here. You want to sell it to this level, take profit, and then let the market readjust itself. And then now you can look to, swing it the opposite way. So that's what, that's what I see with the DXY, what I'll be stalking at with, throughout this week. I'm long-term bullish on it, but short-term and, everybody's long-term and short-term definitions are different, obviously. But like I said, I wouldn't be looking to hold any type of buy. If I have to buy, if I catch a buy, and that's like, you guys know, I mean, we've been on a cause enough to where we'll have a bias and we'll look at that. But let's say you only are looking at New York. That's why you have to know if my trade is, if I'm going with the trend or against the trend with this setup. And trades against the trend, you're going less lot size and you're going, you're going for less pips. And trade with the trend, I mean, not to say higher lot size, but your normal lot size, and you're going for, in a sense, a higher amount of pips. So you just have to know what side, knowing what side of the market that you're on is the most important, is the most important part of things, because it's been plenty of times to where we're going against a trend on setups all week, but we're able to catch 30, 40 pips, 25, 30 pips on each setup, because we know when we're going against a trend. So we're not going to look to hold this trade forever, but this was the setup that presented itself throughout the session. So this is the setup that I'm going to take, right? And that's why I'm okay with being on the wrong side of trades, but catching 25, 30 pips. Like I'm okay with, if I catch 25, 30 pips and I get in that move and I take profit, and then the trade goes the opposite way for 40, 50, 60, I'm okay with that. Like, and you should be okay with that. You can't be upset about being in the wrong side, but that's why we take partials and we take profit so much on a day-to-day setup, because that just allows you to reevaluate things, see what you did wrong, but then you have more times to trade. Like, you're not done trading just because you were on the wrong side of the move. You can still make profit, but the biggest thing is, once you do take profit, you're done with that. You're done with the trade and you're done with the setup for that session. Come back the next session. Once you start to try to get in the trade again because it hits your break even, or you're trying to force the trend, and you think you're on the right side and you're trying to find re-entries, then you're done. Like, then you start losing money, and then next thing you know, you look up and it's 6 o'clock in the morning, and then New York session's in a few hours and you haven't slept, and now you're thrown all the way off. Now your mental is shot, and you're mentally done. So like I said, that's why following a plan, taking partials, and just taking things day by day, session by session is so important. But it's the mental part of things. Everybody's issue isn't catching pips, it's blowing your account because you're over trading too much. You're trading way too much than what you should be trading. And after, like I said, if you take profit and you manually close a trade, you're done for the day. Either your trade hits break even and you took partials, your trade hits stop loss, or your trade hits take profit, right? Or, like I said, if you close your trade manually, then you're done. So that's looking at EU, looking at GU. You can also go over. So one setup that I really like too with the DXY is I really like the UJ setup. I really like this UJ setup a lot too. I got you, Tess. I'll answer it, whatever your question is, in a second. But I really like this UJ setup as well. So when we come in, we look at UJ. We look at UJ over here, right? And we see that UJ is in bearish structure right now, right? USD JPY is in bearish structure. So just like US, just like what's it called is, what do I want to see is, when we have this imbalance being created, what did the market do over here? It was bearish, so it starts attacking lows, and this was the swing low in the market. So it cleared out that swing low, and then it started to pull back. And what did it pull back into? It pulled back inside this imbalance here, right? Now, we didn't trade all the way above of where we wanted to see it trade inside of. We drew this up last week, but it didn't happen. It didn't trade that high up. It rejected down off that break of structure and rejected off of that. But now we see how it's kind of, bullish structure is being respected, because this is that low, and now it's created this low, and it's pushing up from that low. But long term, who's still in control of this right now? Sellers are still in control, right? We know that sellers are still in control of this market. These swing highs are still respected here, and the market is still in bearish structure right now, creating this bearish structure. So we only got one push down, pull back. Now, what am I looking for? Some people might consider this the second one, but I consider that the first big push down. Now we get that nice pullback. Now what are we looking for is, okay, bam, and we're looking forward to go what? Attack back to these lows, and back inside of here. At some point, we'll see UJ trade all the way back inside of 126 point, 126, 128 level. And your first target would be that 131 level right there. With those UJ sells. So these buys to the upside are going to be scalps. You can catch some potential buys and scalp it up. But your long-term trade, once you do find a sell setup up there, then what are we going to be looking for to do from there? Is to hold that trade, target back inside your lows, and that's your move, right? So if you know that's your long-term setup, then, like you said, you might want to hold a position. You might want to, even if you leave a 0.10 or something small, according to, whether you're on a funded account, whatever it may be, everything is different for everybody's accounts, but you leave something up there, leave anything up there, right? Even if it's a 0.01, 0.02, 0.05, anything, leave something up there if you find an entry up there, because then when you go and you look for your re-entries, you're just that more confident in your trade and your setup as it continues making its way down. And we know it's not going to happen in 1 day, two. This isn't going to attack these lows in 1 day, 2 days. This is, this will take literally like a whole month, and, a few weeks to actually play out. But it's the more, like we said, we're day traders, so we want to follow the trend on a higher time frame, because that's how we find those super strong explosive moves that are going to go for the 100, 200, 300, 400 pips, right? So it's how many pips is it? Let's just say from here back to this low, it's 957 pips, over 900 plus pips if it retraces back inside of here all the way down inside of here. So you're not going to look just to trade one entry. You're going to catch multiple entries to the downside, and by the time it gets down there, you'll catch more than 957 pips. So that's what I'm looking at with UJ. And now it's a little bit contradicting with the with JPYBASKETS in a little bit of a sense. But what was your question, Tess, with that before we go over to our JPY pairs?
Okay, in case the recording doesn't clear up my question, I wanted to ask you, back to the topic of the counter trending, you had said, less pips. Do we keep with the same trading plan on as far as lot size? It sounded like we did, but we have a less expectation.
You can, when you're going against the trend, it's just it's a matter of the setup and knowing, your risks per trade. When you're risking per every trade, I don't risk more on, I don't change my risk when I'm counter trend trading or trend trading. Like, the risk and the setup is the same. But like, it's really just depending on the setup. But I would recommend, like I said, if you're using like a 0.25 as your, your lot size and you're going against a trend, I may only get in with like a 0.20 or a 0.15, and I'll take my 15, 20, 30 pips. But at the same time, I will go in with the same lot size too, as, as the original trade, because it's you're trusting. You have to have like that trust. Like, at the end of the day, you do have that trust. You should have that trust in every setup that you take, but just knowing that it's going against a trend. So I might, like I said, I may recommend, as you're going through things and practicing, to lower your lot size if you're feeling like it's against a trend. But at the same time, with every setup that you take, we're mapping those. And I didn't really go over entries and stuff today. We'll go over entries on the mentorship with the call tomorrow. We're going over the fib and everything. But even when you're going against a trend, that, like I said, you're trusting a trade and you're trusting your setup to where, you get to the point where you're going to use the same lot size for every trade. It's just a matter of knowing that, I shouldn't hold this trade. Should I hold this trade, as opposed to, I'm in the profit, right? I go in a profit, going against a trend. Should I hold this trade, or should I let this trade, should I close this trade out after I'm up 25, 30 pips, because I know that it has a good chance of continue going the opposite way of, what I'm in. So that's just that's the mindset. It's not so much of you having to de-risk, go lower risk against the trend, more than it is just your pips you might not go for, if your goal every day is to hit 40, 50 pips and you're going against a trend during London session, I would only go for 25, 30 pips, 20, 25 pips during London session if I'm going against a trend during London. And because then now that allows me to wake up for New York in profit, no matter what, right? Because now when I wake up from New York and I've already caught 20, 25 pips, my mind is a lot more at ease of finding an entry for New York and being patient, more than it is that, okay, I didn't trade London session. Now I wake up from New York. I feel like I need to catch an entry. I need to find an entry. I need to catch a move. And then you might lose the first setup that you're looking at. And then, your mind goes all over the place from there. So
thank you, Mike.
So I hope that answers that question, and answered whatever anybody else questions of the, with the de-risking things. I don't necessarily, against a trend, I don't necessarily look to go lower lot, more than it is I might go for lower pips on that setup and not look to hold that trade overnight if I'm going against a trend in the morning or at nighttime. Same with like New York session. If I know I'm going against a trend from New York, I'm not going to look to hold that trade going into Asian or, going into the next day. I'm going to take my 20, 30 pips, whatever the setup gives you. Some setups against the trend can give you 40, 50 pips, right? Like, we know not every trade against the trend is only 20, 30 pips. You can find some good moves against a trend It's just a matter of knowing and not being greedy and following, knowing that there's going to be another session. And my mindset is I'm almost thinking ahead with every session that I trade in. Like, what can I do to get in the profit for this next session and the next day? What can I do to end the day? You just want to end the day in some type of, you want to end the day in the session in some type of profit, because we know there's going to be a next session. It's going to be another London. It's going to be another New York. So what can I do to get into profit this London session so that the next London session I'm in profit and I have a lot, my mind is at ease now. That's how I always like, especially with starting the weeks off. I don't try to start the weeks off and go for 40, 40, 50, 60, 70 pips, 100 pips on the setup. Or, even I might even start the week off with lower risk to start the week off than the original lot size, because I just want to start the week off in profit. That's it. All I want to do is start the week off in profit, right? But at the same time, if you lose lower risk, the second you use a lower risk and then you do increase your lot size throughout the week, now you start to mess with your pips. So that's like the mindset of things, of just being super selective with trades, and not in the sense that you lowering your risk more than it is controlling your risk and trading with a stop loss. Because once you trade with a stop loss, you don't necessarily have to lower your risk on setups and trades, because that you're managing it the proper way, and you're confident that you can get in, like, every trade, you're confident enough that you can get up 10, 15, 20 pips to where you'll be able to move your stop loss to break even. And that's one thing. Always don't, after you get up 10, 20, 30, and that's like get in the habit of taking profit at 20 pips. The trade might go for 40, 50, 60. Just take profit. Take profit and come back at it the next day. Come back at it the next session. Not even the next day, the next session, right? Like, and that's my thing of when you're really in that grind mode of practicing and really trying to understand this, you'll be up for 30 minutes, an hour during London just to catch 20, 30 pips, just because you're a New York trader. I love New York session more, but that doesn't mean if I'm really trying to practice and understand this and understand how the market moves, I can catch pips. Like, I can catch 20, 30 pips before I go to sleep. I can get in a trade to where I'm risking 20, 25 pips before I go to sleep, right? Because then, those chances, more times enough, you're going to end up being in profit when you wake up. And then it makes New York session so much easier to trade, like by trading the previous session. And that's like the same thing with news. Trading before news is easier than trading with news. Trading after news is easier than trading with news. But trading before news is way easier than trading with news, because you'll go through and back test it enough. And even like last week for NFP, all the moves happened in London session. All the entries were during London. If you only woke up for NFP, it was like you were shotgunning, you were trying to risk, you were gambling in a sense, because the market was moving so quick during NFP. And I screen recorded it on my phone. Like, I'll send it out. And it's like, why would I want to trade this? Like, why would I want to do this to myself? Like, it's not worth the mental stress of doing that. Like, it's not worth it at all. Let me see. I'm actually going to try to send it to the Telegram real quick so I can show you guys. Like, why would you want to deal with this type of movement in the market? Like, it's not worth it at all. Hold on 1 second. Give me 1 second, you guys. I'm trying to see here. I know I took a video of it with NFP on Friday. I just want to show you guys real quick. Let me see. Okay, yeah, this is perfect. So let me send this to myself so it gives it a time to send. It's just like, why? I mean, I was in entries, obviously. So, I mean, but I'm going to show you guys an example of it, right? And just why it's like, why deal with this? Why even put yourself through this type of stress of trading with these type of lots, or trading throughout news? You want to be in the market before news, so that your trade is risk free when news hits. So okay, cool, that's something. All right, so now let's get back into our charts. So looking at JPYBASKETS, starting on a daily time frame, right? What I'm looking at with baskets is I'm looking forward to really. I'm looking at bullish momentum still. Like, yeah, a long term with JPYBASKETS, still looking for this to start buying back up to the upside. Buyers looking control. It made all these stop hunts to the downside. We had all this marked up down here from previous weeks. And that's why it's like with everybody with trading, there's no perfect time to start mentorship. There's no perfect time to hop on the calls for the people that are on just the call today. Like, there's never going to be a perfect time. It's just the more you wait, the more in the sense that you're missing, and you're missing out on things more than anything. Like, there's not a perfect time to start trading, to start practicing, to start doing anything. You just have to jump into it you know, and so that you can get into a groove. Because we marked this up all the way in June, these lows from over here. And we saw that the market came. We've been talking about this, stop hunt at the lows, bam, and it started pushing to the upside to play back inside this imbalance over here. Took out that trend line over there, bam, played back inside the imbalance. And now we had this bearish momentum start happening. Now, what do we have from here is what we marked this up at the start of last week on Sunday, and it never played back inside of it. It just, JPY just went straight bullish to start the week off and then started making the retracement. But this is still valid for me. Like this order block in this zone right here is still very valid. So when we come and we look at this order block, and, you know, for my people, the newer people and everything, order blocks are just like those, you know, it's those candlesticks from strong bullish or bearish momentums that engulf the previous candles. So what we have right here is this bearish candlestick right here would be considered our order block, because this bullish one came, engulfed it. So what are we looking for is we're looking for some type of pullback inside of here. Now, what do we also have is, let me kind of try to get rid of things, is we have this imbalance. There's no sellers inside of here. There's no sellers inside this bullish candlestick. It came, it pushed all the way up, and the market hasn't came and made that 50% retracement from there. So what do we see happen now, though, is it started making its way back inside of this imbalance over here, but then it pulled back. Now at this pullback, what do we see? This is on the daily time frame. So we always talk about when we're on the 1 hour, 15 and 5 minute, where do we love to find entries at? Where do we love to find entries at on the 1 hour, 15 and 5 minute?
It retraced more than 50%, didn't it?
Not inside of this bullish candlestick.
Oh, okay.
So we take from the top. Now, if you're taking it from here to here, we are inside 50%, right? We traded all the way to 78%. And this is like, that's why I always say I don't take my fib setups and entries off of a daily or 4 hour, because technically, if we're going off of our fib entry rules, where will we look to enter the trade at? Start entering the trade at least around the 50%. And from that 50% to the bottom of the fib is 300 pips. No way, Jose, right? Not a chance. Not even from the 68 would I enter, because 230 pips, not a chance. None of that on the daily would I enter these trades on the daily time frame because of the crazy risk. Maybe from the 88%, 93 pips on the daily, if I know that swing term I'm going back for, you know, potentially 600 pips, then I can get in with a super low lot size, maybe 1% of what you know, 5% of what you usually get in, and you can hold a trade. You know, same risk though. You know, if your daily risk is $50 and you're using a 0.25, because you can risk $20 with a 0.25 and you can lose $50 a day. If you get in off this setup and you're risking 95 pips, how many pips, what's your lot size have to be? If you're risking, let's just say 100 pips, if you're risking 100 pips on a setup and you only want to lose $50 on this trade, what would your lot size be? Who knows that math? What would your lot size be if you're risking 100 pips, but you only want to lose $50 on the trade if it does hit stop loss?
0.001 maybe?
No, not 0.001. It'd be 0.0 something. It'd be it's I don't know if anybody knows, but it's 0.05. 0.10 would be $100 a day with 100 pips. So half of that. 0.05. 0.05, risking 100 pips, you would lose $50 on this trade.
Mike, why didn't you draw the fib from that lower area?
From here?
Yeah.
Because it's already came and retraced inside of this candlestick right here, this bullish imbalance that it created. You see how we have this bullish imbalance right here? This bullish imbalance right here, it created that one. And then we can see how these next 3 candlesticks after that, what did it do? It retraced all the way to the bottom, rebalanced it, and then made that bullish push from here. So if we're looking at structure, technically, if the market comes and breaks underneath this low, then we could be potentially looking at bearish structure from there. If you got a daily close underneath there, we could be going bearish from there, because everything is already, if the market's going to continue going bullish, then it will reject off of this candlestick right here, just like the same way it did right there. It will reject off of there. And then that's when you're going to see that strong move, because the same way that we have a fib set up from here to there, you would have had your fib set up from here to here, just like that, and it's already played out. That fib setup is already played out from 61. You know, it made its retracement and it bought all the way up to the 1%. You know, it bought all the way up and made a full swing there. So it's already made that it's already made that move inside of that imbalance and there. So like I said, if you were looking at this chart on July 22nd and you saw that bullish imbalance, and then on July 27th, it pulled all the way back, that's what you would have been looking for. Is from there, you would have been looking for buy entries off of the market comes and hits inside that 50% of, because the same way that we just drew, the same way that I had this fib, well, whatever, that's fine. The same way I had my fib drawn from when you just asked that question of why did I draw the fib from this candlestick to this candlestick, and then we draw out that my zone is a little bit tighter right there, but we draw out that 50%, and that's the imbalance right there of a zone of when we start looking for buys inside of there, right? That's where you're going to find strong buys inside of that zone. So the same way that we do that right there, then you would have done the same thing right here off of that bullish imbalance, because there's no sellers inside of there. You draw your 50% of that imbalance. I can't, where's it at? Let me get rid of this fib over here real quick. Does that make sense? Why, like, you know, the drawing of the imbalance candlestick? And it's the same way that we just saw with the DXY. You draw the 50% of this imbalance right there. What do we saw happen was it came, traded back inside the 50% of that bullish imbalance. I think that's the 50%. I can't really tell fully right there. There it is. Drew back inside that 50%. And then what do we get from there? Was traded back inside of that, consolidated, bam, 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 pushed up. Never cleared out that low. That low is respected, and it pushes up from there. So the same thing that's happened right there is the same structure that you want to see being formed inside of here. And then from there, you can find explosive buy entries from there. And then what we also see on a daily time frame is, like I was saying, was we have these lows right here. This is a daily chart. So all these lows right here, these are all lows on a daily time frame. These three lows right here, 1, 2, 3, these are three lows on the daily, right? So when I always talk about things, and I always tell you guys, where do I find my best entries and my best setups are where at daily highs and daily lows, right? Session highs, session lows, weekly highs, weekly lows, those type of things. So if I'm looking for buy type of entries and I'm going to be finding strong buy plays, and what do we want to see happen essentially is we want to see sell side liquidity get taken out, which is lows. We want to see these lows get taken out. And now after those lows get taken out, what will happen? There's stop loss, there's sellers, sell stop sitting underneath here. They activate those that go into some type of profit. And then what will we get from there? Then you start getting that consolidation. Then we might get on the same thing. We have like another daily low get formed underneath here. You see a daily candlestick get formed underneath here. Structure is still being respected. This is all being respected. So when we see that daily low being formed underneath here, let's just say this is, let's just say this is like a daily candlestick right here. That's a bearish candle, right? When we go into our next day, we're going to want to see the market come and basically like leave that wick underneath there, stop hunt that low. Then we get the bullish candlestick. That's a bullish. And then we go and we start trading back to the upside. And that's when you get those strong movements back from there. So I want to see a strong drop off with JPY baskets to play back inside of here, create a bearish imbalance, create these super strong bearish candlesticks, get them inside of there, get the manipulation, and then take it back to the upside with baskets. So with that, if JPY baskets, so the correlation with JPY baskets is just the opposite. It's like the DXY. JPY baskets goes bullish, then you're looking at pairs like XXX JPY. Looking at JPY baskets goes bullish, we're looking at pairs like GJ to go bearish, right? So we're looking at XXX JPY pairs to go bearish. I probably should have did the regular correlation first, was the JPY. The first, right? So, oh, sorry, I need some water. JPY baskets goes bullish. We're looking at pairs like UJ, GJ. What other pairs is it? Euro JPY to go bearish, right? So what we're looking at, JPY baskets goes bullish. We're going to be looking at the opposite way. We kind of already drew it over here. Baskets goes bearish. These JPY pairs go bullish. Baskets goes bullish. JPY pairs goes bearish. So what are we looking at over here? Like we said, JPY comes and drops down inside of here and starts to go bullish from that zone. JPY baskets does. Then what am I going to come over and look for? What kind of structure am I looking for on GJ? Am I looking for on GJ? What are we looking for on GJ? What kind of structure do we want to see? And what do we, what do you see right here? What would you say, what would we say what GJ is right now? I have so many markups on here already. But what do we want to see GJ do? What do you want to see GJ do this week? What would you guys say? Somebody tell me something.
Like to see GJ pull up, buy to sell.
Yeah, pretty much. That's like pretty much what I want to see too, is we have imbalance, right? Order block. So what would you do, right? Off of that, I would draw. Have we traded inside the 50% of that candle yet? Answer is no, right? So what do I do there? I would draw something like this potentially. And I'd be looking to potentially sell off of something like that. We get that, like I said, I would like to see a buy up inside of there, take out these highs over here. We have all these highs sitting over here, bam, 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 take out those sellers that try to get in and short it all the way down, take them out, activate these buy orders, take them on a little ride, maybe even get a stop hunt to this high. But from there, I'll be looking for, as long as it doesn't close above these highs, and we might get, like you said, you might get a stop hunt, might try to push out a little bit, but it closes inside of here. We close inside of this, even it might not even trade that high up, but that's just examples. But like you said, once it comes above and it clears these highs and we know these orders are activated, they'll take them on a ride. Seller's still in control, and where do we target back to? Now we start targeting back to these lows, and that's how, that's how the market works. A stop hunt means that it's just like the same way it's a stop hunt is it takes out stop losses. It takes out people's stop losses. You have to think about the market where retail traders. So you have to think about the retail traders that just trade all day, every day. And where do they put their stop losses at on the setup on every single time frame? And you'll see it on every time frame. And we'll talk about it on the calls throughout the week. We talk about stop hunts and all that stuff throughout the week. So tomorrow's call will probably be a lot of talking about it. But the stop hunts, right? It's taking out highs and lows in the market. So they'll come to take out these stop losses, take out those stop losses right there. People that have their stop losses sitting up above these highs, and then they'll take out those stop losses, bam, and then they'll take the move the right way. So you always look for a stop hunt before your actual move on any type of time frame. It's the same way we're looking at this over here. We see that it looked like it wanted to buy up. You go down to smaller time frames, it wanted to buy up. The buy was the right move, but what did they do first? They stop hunted these lows because their stop losses. If you're a buyer, you want to find out where the previous buyer stop losses are at, and that's where you're going to find your best setups and trades. So if buyers are in the market from here and they bought up from here and they have their stop losses sitting underneath these lows, stop losses underneath these lows, where else would they have their stop losses sitting at? Underneath these lows. So what does the market do is it hits those lows, but the market never closes underneath that. It never closes underneath there. So all it did was it stop hunted, which means that it looked for those stop losses, took them out, activated the opposite orders, activated sell stops, activated people that have their sell stops sitting underneath these levels. Some people have their stop losses that bought in, and then the opposite people that trade breakouts have pending orders sitting underneath highs and lows. So they activate all those orders for sales, and what do? The orders get activated for the sales, and they take it straight back to the upside. Account blown, your account is blown, or you're in crazy drawdown, and it never comes back, never comes back, never comes back. Now, before these sellers have a chance to get out the trade, now they're going to do what? The people they're going to attack the short-term traders, which are all these sellers that are selling all over here. People selling off all over here, selling off, trying to take it down. Now, throughout the week, they'll take them out the market, consolidate it, bam, and then they'll make the real move. So everybody that's sold off over here, they don't get a part of the move. They were right on the direction, but timing wasn't right. Started looking at other pairs, and you don't catch your actual move. So that's what I'd be looking for with GJ is short-term buys, playing the buy setups. We're only going for you just don't go don't go for as many pips on the buys. You scalp the buys, you take your profit and look for a sell setup. You buy to sell long term with that. So that's what I see going on with GJ. I mean, it's actually the same as UJ. I don't know why I said opposite, but so like looking at UJ, it's very similar as I'd be, like I said, I want to see it come trade up above, and then look for UJ to trade down lower. So you see the correlation with JPY baskets of why I like that UJ setup a lot too. Like that UJ setup, like the GJ setup. Euro JPY, same type of thing. What do we have? These lows failed to get hit right here. So what do we have? Buyer stop losses are still, buyers are still, they're still holding on for their life. They're like, yep, we're going to go. It's going to go now. Now it's going to go. Because it's that same way. It pulls back and they're like, okay, cool. It pulled back. Structure is respected. I'm holding my buy all the way through from here. What happens? Stop loss. They come, take out that low. And then what? It respects it. So you're like, whoo, re-entry. I'm good. I'm holding that trade all the way. And this is on a daily time frame, but you see it on every time frame. Because when you don't realize that structure is going the opposite way is when you start holding on your trades forever while structure is just being broken and it's going to eventually come take you out. And you see it on every time frame. Like I said, everything we're talking about right now is on the daily. But when you go to the 15-minute, the 5-minute, the 1 hour, you see these same type of setups all over. Just the higher the time frame, the higher the setup, and the more, the stronger the move is. You want to be following whatever move is on a daily and 4 hour, on the 1 hour and 15. So like I said, with Euro JPY, any type of buy to the upside to come and clear out these minor highs, what are we really going to be looking for is to come take out these stop losses, right? It's going to take out these stop losses right here. It's going to take out these buyers that tried to buy in. That's already been buying, you should have been buying a long time ago. Should have been playing the buys, and now you would have been playing the sells, and the sells are the ones that are going to be in control. Because what do we have happen is it comes in structures being broken right here. This is like when you would see a BOS or something like that. I'll put BOS on the chart right there because that's a break of structure. That's a break of structure right there. Structure is broken with that imbalanced candlestick. And now we're looking for those pullbacks and looking for Euro JPY to continue going lower and target back inside of these lows and keep reaching down. So that's yeah, that's looking at Euro JPY. You go through your chart, you guys we kind of just did, pretty, marked it up, at least how I'm looking at things, but go through, see what you're looking at on your smaller time frames, because you just want to go through and look for these same setups on a smaller time frame. And those are going to be the setups throughout the week that, that we trust and that we hold, that we look to hold. So that's that's my, that's the DXY outlook, JPY outlook for the week. Obviously, things can change, things can change throughout the week. Just because you have an idea of what you want to see doesn't mean that has to play out every single time, but more times enough. We do this every single week. I send out my charts a lot, and I think more times enough, a lot of the setups that we're looking at end up playing out. So it's just the consistency of just doing things over and over and over again. And that's, and that's that. So I've been on a call for a good minute now, about an hour and a half, I think, right? I think we started at, what time did we start at? I don't even know. What time did I start at today? 9 o'clock in the morning, my time. It's 10:30 now. So we've been on for about an hour and a half. So, I think it's been a little bit a lot to ingest, but it really hasn't, we really didn't even go too in depth, but yeah, we did. I don't know. I'm just talking. But anybody have any questions, or anything that we've been looking at, or anything that they kind of want to ask or go over, feel free to type it in the chat for me right now, or any other pairs that you kind of want to do a quick little brief overview over. I'm not going to go too deep into any other pairs, but I'll give you my brief analysis of what I see, with something else outside of, I'm only trading the same things. I need to clean my watch list up for the week before it starts.
Will you give a look at the indices?
Yeah, we can look at the indices. Everybody kind of knows how I feel about the indices, and trading them, and everything. Now, looking at the indices, I'm bullish. Like, I'm bullish. I think we'll get some type of pullbacks to start the week. But looking at the daily time frame, looking at NAS, it's like you can see how strong this bullish momentum is. And I just pulled this up right now. We've had this marked up. I've had NAS marked up. It came inside this buy zone. I don't even know where this is. You see, had NAS marked up for a while. And this is kind of the reason that I'm not trading them, is because of should have been trading it already. Like, trading it now is like, is trading literally in the middle of the trend, in a sense, in my opinion, right? Because it's like I said, we've had this marked up. We haven't marked up NAS at all today. Everybody, you guys have been on the call the whole time. We didn't mark up anything. This is all coming from markups at the beginning of June. What are we in July now? This is June 17th, June 15th. It came and played back inside these lows, pulled back at the beginning of July, and has been bullish, since July. We're at August 15th now. So now when I'm looking at this, you know, when I'm looking at it, it's just, you know, like I said, I feel like I missed a move a lot with the NDCs. They're very trendy. So I kind of just been, you know, letting them play out. You know, letting them play out honestly, and you know, seeing the moves. I haven't really participated at all. I'm not gonna lie. I tried to take a couple of trades with NDCs, and they both didn't really play out. You know, the move played out, but they stop hunted so much on a smaller time frame, and the move happened like at the end of the day or something, that none of them really, you know, none of the setups came inside of, you know, the rules that I like to stick to on a day-to-day basis. So I think like I said, with NDCs, I would really be swinging NDCs. Like, you know, that's what you should be doing if you're practicing NDCs, is looking for those swing setups, because they're super trendy and you're not going to find, you can make money on this 1 minute, 5 minute, you can find entries, you know, and all that type of stuff on NDCs. But the realistic part of it is you should know what side of the trend, if the market is bullish or bearish. And then when you do find a move with the trend with NDCs, you should be looking to hold on to that trade for, you know, until you have a reason to actually be out of that on a higher time frame. And like I said, looking at these, we can see how every single time that NDCs came, pulled back, structure respected, you know, it's been straight buy. So for me, you know, I'm not really looking to trade them right now. What I see Nas coming in, like Nas coming and trading back inside of, is probably something like this one right here, and getting a rejection off of this, right? I mean, that's looking at the floor or looking at the daily. But yeah, I mean, probably some type of rejection off of that area right here on the daily, because we have like, let me go back over to it. We have like this imbalance right here. Market never came and traded back inside of this candlestick right here. We can see how all the previous candlesticks traded back. Same thing right there in a sense. But I'd be looking for some type of rejection off of this one right here on, you know, this is on a higher time frame. But all that will be some type of pullback to continue going, you know, back. I really want to see a trade back inside this order block, all the way up here, back at like the, you know, back inside 1500s up here. So yeah, that's my opinion with the NDCs. You know, with that, same thing with SPX. We look at SPX, it's like it's been bullish as hell. Like you could have bought, you know, you could have bought in on one of these setups. And then when we come over here, I didn't go over the system or, you know, go over MT4 or anything today right now. More than it is just marking up the charts. But if we go and you like look at 30 or whatever it may be, one of these setups that you would have found during London session or New York session, whatever the case may be, was something that you would have been, you know, that you should have been holding. And when you look back at this, you'd be like, I mean, you know, shit, like I should have been, you know, it would have been no reason to be out these buy trades. And but then you look back at it, how many times did you try to buy and, you know, get stopped out the trade because it stopped hunting on a lower time frame, took you out and then went that direction. Happened a lot, right? And it's just, you know, that's why it's like you have to find those right setups to it, and you have to hold your trade and know, you know, what side of the market that I'm on, and should I be holding this trade? And then just knowing your pair, because let's see, it's like all the way from almost, this was the pullback all the way here on August 5th. It pulled back during New York session and never came back to this New York low right here. During your kill zone between 9 and 10 o'clock at this low right here, it pulled back at the beginning of the month. Like we said, it pulled back on the 5th. 3 days later, it pulled back, cleared out those lows, cleared these lows out during New York session right here. Never came back to that low during New York. And it's been gone since. And that was like maybe 2 weeks ago, 2.5, 3 weeks ago or something like that. And then everything since then has been, you know, it's been harder to catch that move and to get a part of that trend, because the moves have been happening, you know, not randomly, but they've been happening, you know, outside of when you want to be trading. Order block is the same as supply and demand or support and resistance. They're going to find you'll never hear me talk about support and resistance unless I'm referring to something on the system, but you're going to find your order blocks and your order blocks bullish or bearish in areas of support and resistance. So we're not looking, you know, areas of support and resistance, they're going to get taken out eventually. So we always talk about, if we all go on our chart right now and mark up areas of support and resistance, everybody's going to have a different area of support, a different area of resistance. Everybody's going to have a different area of supply and demand. Everybody learns supply and demand completely differently. That's why I don't talk about supply and demand or support and resistance. And I would almost in a sense I would highly recommend, which, you know, starting to cut that out. And it's not one thing talking to one person, but people that have been around me for a long time know, and, you know, know that, you're not going to see me mark up a chart and go mark up support and resistance or supply and demand. I'm more so than it is marking up liquidity and marking up where your liquidity is at, where buy side liquidity is at, where sell side liquidity is at, and looking to see, where buyers going to exit the trade, where sellers going to exit the trades, where can buyers get into trades at better entries, and those type of things more than it is marking up, supply and demand or support and resistance, because all those they're all opinionated. All that is opinionated, but liquidity is not opinionated. You can identify liquidity, and everybody, you can identify liquidity. Like I said, with support and resistance, 15 people on the call right now. If I tell everybody to go drop off a chart in the chat, everybody's going to have a different chart, and not one person is I'm not going to tell one person that chart is wrong or that their chart is right. Like, because it's not, I'm not the genie, I'm not the market maker, I'm not the master of trades or anything, the master of charts, but all that stuff, like I said, it's opinionated. Everybody has a different opinion, and not one person is right, not one person is wrong. But those are things that, we can't control that. So what we can control is everybody looking at things in the same perspective. So I know, for example, Tess, I know you need to get, their templates set up and everything. So once you, like I said, we'll get these set up, and you might, you'll start looking at things differently in that aspect. So like, and even a quick example, even looking at like whatever this is, whatever chart this is, this would be considered an area of resistance because it bounced off this area multiple times, 2 times, and it dropped off from there. People would be looking at, the average person would be looking to come and a sell off of here, and it might come and reject off of there for 20, 30 pips or something like that. But then the reality of it is that it will come back, take this out, because this is liquidity. This is buy side liquidity right there. And buy side liquidity is just areas of where buyers are targeting in the market, where buyers are going to look to exit trades out. So if the buyers are in control from here, where are the buyers going to look to exit the trades at? Double tops and double bottoms, support and resistance. That's where they exit the trade out. That's where you'll see a stop hunt activate these buy orders up here, because people will have pending orders for buys right here. The buys will go into profit a little bit, but then they'll come, drop it back down. Then the buyers are still holding on to the trade because they think that it's bullish, but then it comes, it drops down, it pulls back. They're still holding on to the trade because now they think it's going to keep going. And then what happens? It drops off, and now your bullish perspective is completely wrong because you should have been looking for buys from down here, not from up here. But to think the buys are right for a whole day, 2 days, while the market is just creating bearish structure, and then it drops off all the way to the floor. And now you've been holding the buys, and now you hold that buy perspective at that area of support or that area of resistance, and now it broke it. So now you're bullish. Now you're holding the buys, and now the market is bearish. And now, now it's all the way down here, and you were looking at the market all the way up here, but you were bullish because, you're messing with, you're thinking of things as support and resistance, because the average person is now, it's like, oh, that's an area of resistance. It gets broken. What's the area of resistance? What does the area of resistance become? Oh, that becomes an area of support. And then the market does do that. Then it comes and bounces off that quote unquote area of support. Then they push it up again. Might stop hunt that high right there. And then what happens? Now it pulls back. Now what do we have right there? Now you start but you don't even see this being formed because you're bullish off of this area of support. And now it's creating an inverted head, a head and shoulder or something, whatever. And then it drops all the way off. And now, now you're all, now your mind is all over the place because of support and resistance. But if we're looking at things as liquidity, what does this allow? Now buyers get out the market, manipulate late buyers, retail buyers. Now sellers position themselves to take it all the way to the downside. And that perspective makes more sense and something that everybody can agree on more than, oh, is this an area of support? Is this an area of resistance? Is this that? Is this that? No. That's not, it's not how we want to look at things. So it's a process of kind of, forgetting the old things and working on new things, honestly, more than anything, is that's the biggest thing. Because when I teach new people that never traded before, like my friends and everything, or family, whatever, that, I see, they're not going to hear me talk about supply. Like they don't even know what supply and demand is, or what that couldn't even, differentiate the two before, between a buy and sell. They won't even know, does demand mean buy, demand mean sell? They have no clue. But they can catch pips, they make consistent money, and they make withdrawals and everything, because all they're going to do is listen to the things that, I talk about, the things that I tell them and whatnot. And like I said, I'm not trying to claim to be right or wrong on everything, but the concepts and everything that we follow, they're consistent. We've been doing it for years. And that's just like, that's the best way to look at the perspective of the market and just understanding the market. So kind of, slowly start to throw out the throw out the support and resistance. It's support and resistance is real. It's not, you know, it's a real thing, but it's a retail concept and a retail way of looking at the charts. If you're just going through and drawing support and resistance, supply and demand all over the chart, because it just starts to throw you off more than anything. So just clearing out that chart, you know, and having that, using your bank levels, using your psychological levels, those are all going to be the things that, you know, really help you progress and see that progress in the next 2, 3, 4 weeks, month, however, you know, however long, you know, everybody's, you know, that path is. So that's I hope that kind of answers that question about the order blocks. We'll talk about order blocks throughout the week and everything throughout the calls. We'll have a training going over order blocks, and we'll talk about, you know, order blocks more in depth on a training. And yeah, order block is more powerful the higher time frame it is. So, you know, the higher time frame on a daily 4-hour, 1-hour order block is going to be stronger than a 1 minute. You're going to see 1 minute. You're going to see plenty of 1 minute, 5-minute order blocks happen a lot. And also it's more powerful during the right times. If you see an order block form during Asian session on a 5-15-minute time frame, good chance is that, you know, you see an engulfing candle during Asian, good chance is that candle is not going to be held up during London or New York. That candle is going to be taken out. And then that's when you look for, you know, your order block or your you know, your order block or imbalance to be formed. So yeah, so that's that. Jordan, was that a question, being consistent with taking daily trades, or just saying in general that's what you know, trying to do this week? I think the consistency with taking the daily trades, though, was you about to say something, Jordan? Go ahead.
Yeah, that was the question.
Yeah, what is it exactly? What was your question with that?
Like, so say you get like 25 pips going up one session, the first day, and then the second day trying to find like the same setup type.
Like a buy and a buy back-to-back sessions.
Yeah, or something like that. Like just being consistent.
So that's why I try to preach with leaving the runners more than anything, because let's say I do buy during London, right? And I catch 30 pips and I close the trade out, right? I catch 30, 35 pips, whatever, 25 pips, whatever it may be. You close the trade out, right? Like it hits one of your, you know, one of your zones of, you know, one of your levels of where you're looking to buy or where you think it might possibly reject, whatever it may be, right? You catch your 25, you close the trade out completely. And then you wake up for, you know, you catch that during London, then you wake up for New York, and you pretty much see that buy setup had continued playing out, or, you know, it's still, that buy is still valid, right? Like your entry, you know, it's still a buy setup, and, you know, you think that it's going to continue pushing up. I'm personally, a lot of the times, if I didn't leave a runner on that trade, I almost won't trade it. Like, unless it pulls all the way back to like my London entry or something like that, then I won't take the setup. And I'll let it continue playing out, because then that's just mentally, I know that I should have left the runner on that trade. Like I should have left some type of something on there so that I'm a part of this trade. If I did close out, you know, majority of my profit, or I'm about to close out my trade, I should have left something on there, because I don't want to enter that trade. And what I always do, like when I'm always like, and if I'm looking for a buy, and like I said, you know, you're trying to buy back to sessions, I have to be, you know, it has to be that same risk of, I have to be, you know, one, I would like to be as close to like the low of the day as possible. But then two, it's almost like I just really don't try to rebuy on certain setups, and kind of like let me see, what was a good, if there's an example, let me know. I'm trying to see if we can find an example of like a back-to-back sell during sessions or something like that. This was kind of, let me see right here, with like this EU setup on this, see if we can try to find an example. So this was kind of like it's kind of a couple good examples in a sense. Let's see, this is kind of like a good one right here. It bought up right here, right? And you catch 20, 30 pips, and it kind of goes into consolidate. And that's one thing too, like really get in the habit of not watching the trades overnight. And that's even my thing too, is I will close out a trade by watching it all night when I know I should be holding it until New York session, because I'm watching it all night. And at some point of the night, the market is going to go in it's not going to be fully bullish or fully bearish all night, every night. Like at some point it's going to go sideways, and it's going to go into consolidation at night, because it's preparing for New York. So that's like the mental part of, that's why I like to take partials and go to sleep, and go to sleep, close the chart, watch a movie, whatever it needs to do, you know, whatever you need to do to take your mind off that trade. Because you don't want to watch it all night. More times than enough, no matter how good of a trader you are, you're going to end up taking profit at some point while you're watching it, because you want to secure your money. But that's also why you take partials on every trade that you take, because of that reason too. Because it makes it that much easier to go to sleep at night, or, you know, ignore your trade, whatever the case may be. After that, after you taking partials, because after that, it's like, oh, if I get stopped out, I made some money, like, so I'm good, you know. And if I get stopped out, then I probably didn't want to be in that trade anyways, you know. And if I do get stopped out, then I'm not even looking to re-enter the trade. And then if I do take partials and the partials runs and I just made more money and I let it go and I'm done for the day, like a lot, and that's like a lot of the times if I catch profit during London session, I really wake up with the mindset of, I wake up with the mindset I don't even want to trade. Like I really don't even want to trade like at all for New York session. Like if I catch profit, I can't, even if I catch 25, 30 pips, like, and I take profit off of that, I don't even want to trade. Because for what, you know, like why am I going to give the money, you know, why am I potentially going to give the money? And especially depending on how the market looks and how the setup looks, you know, it's like more times than enough, a lot of the times the trade that you find during London and you know everything, you'll wake up and you could have still been in profit from that trade if you didn't take profit. You know, more times than enough, that's what happens, like when finding a London session entry by the time you wake up to trade New York. And then you always look back at it like, damn, you know, I should have been holding that trade, or I should have left something on it. And you know, so that's just like the mindset. And it's always funny because, you know, we always talk about these things and it's like the first couple of setups, they always come back and take us out, and then, you know, and then the move happens or whatever the case may be. But yeah, I mean, like you said, it's just like that kind of answers that question though. It's like and that's like my importance of always trading. Like, and this is kind of like a good example here too though. You sold off EU during New York, right? Or during London. Bam, sold it off. You wake up at 8, 9 o'clock here. It did sell off, right? It did sell off to start the session off, but it's super hard to find that sell entry and not be risking a trade so much off. And I mean, the trade is there. We zoom in and we look at these candlesticks. What do we see happen right there? The same setup that we've been talking about all day on the daily time frame. What do you see happen on the 15 right here? Imbalance, clears out the low, creates the imbalance, pulls back, rejects the imbalance, and then continues dropping down lower. So, but then realistically, you can catch that trade and you might, you know, I mean, it drops down for 29 pips or something like that. But then what happens is it eventually pulls back and you might only be up 10 pips by the end of the day, because the realistic part of it is if you did sell off during London, which was the right time to sell, then you would be up 70 pips and you end the day up 50 pips or something like that if you did hold that trade all the way through. So that's why I don't like to do the same move from the previous session. Like if I didn't trade the previous session, or if I'm not holding a trade already. Like if I see that it sold off during London and I wake up for New York, I'm not going to try to sell it off. Like unless it pulls all the way back to up here by time 9, if it pulls back all the way up here between 9 and 9:30, then maybe, but a good chance is if it pulls all the way back from over here, we probably played the buys already and took it up there. So I don't try to do the same thing. So then that plays into the patience part of things of, you know, if you don't trade London and you see that it's sold off heavy, and you might even see, like we said, we see a sell setup happening going into 9:30, I'm not going to take the trade because I'm cautious of, oh, it could pull back, you know, it could break that, but it'd still be bearish and reject off of something like that. Yeah, that could happen. But I mean, market does what it's supposed to do. It rejects off the imbalance and continues dropping lower. But that's the stop punt. You know, that's the stop punt during New York session and the patience part of things. Because now, that's why I always say, you know, if I wake up, I don't really try to rush New York at all. I don't really try to rush New York at all right here, because every morning, if I don't trade London session, I really don't, you know, I really wake up in the mindset of, you know, just have to be slow, you know, have to slow things down. I have to be super patient and wait for a setup. And if I don't see a setup for New York, a clear one, I won't take the trade. And I'm hard on myself and I'll be like, I should have been up for London. I knew I should have been up for London, because now I'm trying to, and especially if I lose a trade during New York, I'm even more hard on myself for not being up for London, and know that I need to change things, because it's like the setup played out perfect and I know enough, I've traded enough. We've been on 1,000 calls to know that the importance of, you know, you're trading Forex, you want to be up, you know, you want to be up and you want to, I mean, it's just too much opportunity, you know, to sleep, honestly, for me. Like, so that's looking at, you know, I hope that kind of answers that question, Jordan, of that mindset. And even like, you know, like on this one right here too, it's like, okay, you know, it bought up for London, right? It bought up for London. you wake up for New York and you're looking for the sales. I'm like, well, I talked about this trade. I was like, I didn't sell this off because I'm thinking that it's going to come take out these highs. And I'm like, well, if I was up for London, I would have played the buys and I wouldn't even be thinking about trying to play the sells right now. So me trying to play the sells is, kind of trying to be a little thirsty in the market, in my opinion, but it does sell off, obviously. And, when I was talking about, waiting for it to clear the highs, I was, it was laughing at me the whole time, and it never was going to clear those highs. And it pretty much dropped down from there. So, like I said, I mean, you take the same setups, the ones that you're most comfortable with and that you like to see. But yeah, you guys. So I think that is,
Appreciate it.
Yeah, no problem, Jordan. The block for London, this is 5 to 12 o'clock, right? Every time in price video that you ever watch, this is 5 to 12 o'clock right here. This is 3 to 4 o'clock London session open. This is 9 to 10 o'clock, the first blue box, and the overlap is 10:30 to 12. This box starts at 9 o'clock. The blue box is from 9 to 10. The brown overlap is from 10 or 9:30 to 12 o'clock. And that's after that, day's over. Consolidates for the rest of the day. Bam, bam, bam. And so be it. So that's I think that's pretty much everything for the call today, you guys. Anybody else have anything else you kind of wanted to look at today, or check out? Any setups that you think that you like that you might see? Let me know if you're bullish or bearish on it. Don't just tell me a pair. And we can kind of see what you're looking at. But yeah, I mean, we'll look at EU, right? EU's got, it's going to clear these lows, go for these lows. That's really what, in a sense, what I'd be looking for. Before looking to buy, is looking for it to drop down for at least like 100 pip drop, maybe even like 150 pip drop, and then look to take those buys back to the upside from there. So yeah, I think that's pretty much everything for the call today. I'm working on making the Discord. I'm changing things up with the Discord a lot. For you guys know, I mean, I've been talking about the last couple months, like October is really what I've been looking to like stop mentoring as much, or stop having these calls every day like we do Sunday through Thursday, sometimes even Sunday through Friday. After October, that's gonna kind of stop. And it might even be a little bit. Let me make sure everybody's muted real quick. I know everybody's gonna start to hop off now too, so that's fine, but it's recorded so people can go through and watch it. But it is kind of important news with the group and everything and how things are changing. Everybody knows right now people are paying, whether you pay the 3-month or you're paying month to month. Going into October, a lot of that is going to change, and I'm not even going to be offering month to month mentorship or anything like that anymore. It's going to be, super, like, I'm not going to be, like I said, it's going to be super exclusive, and it's only going to be accepting certain people, and not even accepting everybody into mentorship, because it's just going to be me doing one-on-ones, live trading every day. In really small groups of people, because it's, like I said, I'm going to be increasing the prices to where it's, it's not going to be attractive to everybody. A lot of people don't even like paying the $50, $100. So I know with, $50 for a month or $100 for 3 months, people don't even like paying that. So I know that, with me changing things up to where I'm going to be having things at, it's really not going to be that many people joining, but that's really my goal, is to really, I mean, we always say, you guys been around for a long time. We've had hundreds of people, things been smaller. We've been through companies, we've been through everything. And I got different things I'm doing too now. Like, I'm getting into real estate. I'm never going to stop trading. That's my thing. Like, everybody, if you know me personally or anything, I'm never going to stop trading. Like, whether it be teaching or everything, whatever, like, I'm always going to trade. Trading is my life. And that's, my main income. And, I want to make $1 million off trading. But like I said, just with the mentoring and everything, with, I mean, I try to do things and, be as open with everybody and do things free and everything, and, try to, just give as much free game and, things as cheap as possible. But I really think that hurts a lot of people with how serious they take things, and, and all that type of things, and, the progress that they're able to see. And I don't want to be wasting time either, because I don't want 2, 3, 4 months to go by and we don't really make any progress because of the level of commitment and, whatever the case may be. So a lot of things are going to change within these next couple of months for my people that did sign up recently. So I'm going to be doing, I talked about it a little bit earlier with a couple of people. It is going to change, right? Things are going to be I'm going to be doing like, I don't like to say lifetime because I used to do lifetime mentorship for $150 and I changed things up to monthly for that reason because it was so cheap and a lot of people would sign up but not take it serious and it just isn't worth the time. It's like having a job in a sense. And that's why, like I said, with these new prices, I don't know if I'm going to call it lifetime or yearly. Honestly, I don't like to use that lifetime tag, but with how the pricing and everything is going to be, it will, in a sense, it really will just be lifetime because after that, like I said, it won't be, the groups will be a lot smaller. It would allow me to do live London session calls 3 to 4 times out the week without feeling like it's stressed out or people are just coming and going for no reason. But yeah, that would be that. Everybody that is a part of mentorship right now, your credit that you have paid with mentorship, whether you've paid monthly a few times, you paid $50 3 times or whatever, or you paid $100 for the 3-month, that $100 credit or whatever credit you've paid will go towards the yearly or lifetime fee if you do look to, you want to be a part of everything after I, stop these big groups and everything. And whatnot. And that's going to be changing with the Discord. Discord isn't going to have all these group chats. It's going to be one group chat for everybody that's, wants to talk about all the different pairs and everything. And then the mentorship will kind of be a little more, that's where I'll be at in a sense. So, yeah, I think that's everything. So like I said, I hope that kind of, if anybody has questions with that, then feel free to hit me up or ask whatever the case may be. But like I said, whatever you've paid now to me personally, right? You guys paid to me for mentorship and everything. I'm going to be using that as credit towards the lifetime mentorship so that it's a little cheaper on you guys as opposed to what it would be when I, to the public, when I'm posting on Instagram or posting on the Discord or, whatever the case may be. So if you have questions, I've pretty much been I already have a track of almost everybody, or at least half of everybody's how much you have paid. So if you do end up asking that question, I'll be able to give you an idea, but you can even go through and find out for yourself with screenshots. That's why I always have everybody screenshot everything. And then you can find out, what the difference is and kind of, go from there on if you want to continue. If not, then like I said, I have a lot of people. My goal is for you not to need me anymore. Like that's my goal is for you not to need me anymore. You don't need mentorship. You don't need, you don't need everything anymore because you're on your own, right? Like I have plenty of people now that have their own courses, have their own groups. They're charging people whatever the hell they want to charge, a lot more than what I charge. But that's the beauty of it. Like once you learn it, it's open to you. You make that investment, and then eventually, if you really take it serious, one day you'll have your own group, and that's what I love seeing. I love when I see other people that that I've helped mentored, been on the calls and everything, open up their own group, and now they're able to reach their people, and they're able to they're able to see the benefits of learning this skill. There's so many opportunities of when you learn it the right way, right? We know there's so many groups of people that you join, you learn absolutely nothing. They don't teach you anything, nothing that you can pass on. This is a skill you can pass on to your kids, pass on to generation. Like this is true generational wealth once you learn it the right way. So the opportunities are, endless with this. So that's that. If you guys want to, the new pricing is going to be, it's probably going to start around, and it's probably not even, people told me to charge more anyways, but it's going to start around $300-400 for the lifetime. So a lot of people already have like $100 credit towards it, or even more, like 150, depending on how you've been paying the last 4 or 5 months or whatever. So, it won't even be too bad for certain people that have been invested and have been supporting me for, the last however long it may be. Right. So like I said, I appreciate your guys' support. Like I said, the weeks will fly by. October will be here or before you know it, but really these changes are really going to start going into effect. I'm not even going to be accepting month-to-month mentorships. Really like after really probably even after today, I might stop accepting the month-to-months, and it will be, I'll only be offering the full $300-400, lifetime for people that want to, continue to, that people that want to join going forward after this. So that's the best thing that I can come up with to try to help everybody that has been supporting and that wants to continue to support. But things are going to be different. I'm going to be doing live calls because I have, I was doing one-on-ones, just one-on-ones for live London and New York sessions. But with the lifetime thing, I'll be able to get on every day throughout the week. I don't have any problem getting on London sessions every day with people. It's just a matter of, I'm not doing it with people that aren't fully invested, into this. So like I said, I have a good idea. I already have a small group of people that, that are ready to get going with that and that want to be on the calls every day and everything. So that's just what we're going to start doing and start working towards that. So I appreciate you guys. I don't even know how many people are on right now. The people that stayed around to listen to me talk at the beginning of the call and after the call. I appreciate the support that you guys always show by hopping on. You know, I mean, I quit my job to teach and do this, you know, and everything, and I love it. You know, I would never take it back or anything like that. So yeah, you guys, I appreciate you guys. I will talk to you guys soon. I will send out this recording as soon as it's over. So our first 2-hour call in a long time. So I definitely appreciate you guys for hopping on. Anybody that watches the recording and everything as well. Like I said, I appreciate you guys. And if anybody has any questions, feel free to, you know, hit me up or whatever the case may be on Telegram or Discord. Don't text me, please. And yeah, you guys have a great rest of your Sunday, and I will see you guys soon. No problem, Debs. Good seeing you guys. Good seeing you, Jordan. Good seeing everybody.
Yeah, thank you.